This is The Bottom Line. The Bottom Line on 938 Live.
Now, Indonesia's rupiah touched a 2-week high after the country's central bank raised interest rates and the government raised fuel prices. Meanwhile, the Japanese yen came off 7-year lows after Japan's economy unexpectedly slipped into a recession in the third quarter, and as Prime Minister Shinzo Abe delayed a planned tax hike. For more on the currencies market, we're joined now by Jonathan Cavenagh. He's a foreign exchange strategist at Westpac Banking. Now, Jonathan, for Indonesia, to what extent is the rise in the rupiah perhaps a knee-jerk reaction following the hike in interest rates?
Well, I think that, the market has definitely treated the move higher in interest rates as a positive for the IDR, and that trend is likely to continue into the near term. The trend globally over recent weeks and months has generally been to put downward pressure on interest rates. So Bank of Indonesia is definitely kind of going against that trend, and that should be we should see appealed from international investors looking to invest into the Indonesian bond market are definitely going to be more attractive to the yield story in Indonesia. So we definitely think that the positive themes for the IDR can continue to play out at least for the next few weeks.
Now, President Joko Widodo also raised subsidized fuel prices, in effect freeing up funds for more capital spending. What are the funds going to be used for?
Well, I guess that's the big question now that the market's going to be focusing on. We hope that the funds are directed towards improving infrastructure in Indonesia, particularly roads, etc., but also directed towards the healthcare system as well. Indonesia currently spends, a lot on fuel subsidies, so this is definitely a step in the right direction. But the market's going to be looking in terms of where these funds get channeled towards, and it's all going to be about looking at improving Indonesia's longer-term growth prospects. If that's where the funds get directed, then I think Jokowi is definitely going to get another tick for the market from the market, and that's definitely going to be another positive idea over the medium term.
Jonathan, let's look at Japan next. The country delayed raising the sales tax. What's the near-term effect of this for the yen?
Well, it's generally weakening the yen because at the moment we're seeing the delay of the sales tax feeding into positive equity market sentiment in Japan, and higher equity market sentiment is generally weakening the yen against the US dollar. So that's a trend that looks as if it's going to continue. This morning we've seen dollar yen break above the 117 level against the dollar, so then it doesn't look as if we're going to see any turnaround in that trend in the near term. So the short yen trade is still a favoured one amongst investors here in Asia at the moment.
Of course, Japan's economy also unexpectedly slipped into a recession in the third quarter. Overall, what does all of this signal about Asia's second largest economy?
Well, it still suggests that they've got a lot of work to do. So the Bank of Japan's embarked on a very aggressive easing policy, but that alone is not going to be able to bring Japan out of its slump. So we need to see more reform efforts, and that's why we've seen Abe, the Japanese Prime Minister, move towards calling a fresh election so he can get a fresh mandate from the public in order to embark on a more aggressive reform process. And that's really what's needed to turn the Japanese economy's fortunes around in a much more meaningful way.
Thank you very much, Jonathan. Jonathan Cavenagh, a foreign exchange strategist at Westpac Banking. Thanks for joining us on The Bottom Line, which is brought to you by Turkish Airlines, Europe's best airline.